I think one of the biggest problems for day traders is the market is constantly giving you false confirmation to why you should either get long or to get short. And you have to create rules. You have to create a reason to why you're not going to enter a trade just because something happens in a flash. Just because the market makes a quick move up or down does not mean that you should jump into a trade right away. If your trade rules do not validate the trade, just because the market's moving does not mean it's time to place a trade. We're going to talk about the move this morning and why it was not an opportunity to get long or to really get short until something happened where we got confirmation with our strategy. Let's dive into it, my friends. All right, first things first, we're pulling up the 15-minute chart. The problem with all right, first things first, you can see this is the 1-minute chart. I want you guys to make sure that you are not just focused on only the 1-minute chart. There's a reason I have multiple charts pulled up of the NASDAQ, of the ES. I'm not only focused on just one time frame. We're looking at the big picture. We're looking at what is going on with the higher time frames to get a better understanding of where the market, to get a better understanding of what the overall direction is and where the market could possibly move. Now, with the 1-minute chart right here, you see this kind of breakout on the NASDAQ. We push up here to the 310 level. We absolutely crushed this move this morning live on YouTube from this low down there at the 200s all the way up to the 300s. Absolutely crushed it. But I want to point out a couple of things here. First off, why did we believe this was going to happen? First off, like there's this insane amount of momentum. The market's pushing. So we're jumping into that. We're not afraid of momentum to the upside. We're afraid of buying or shorting the opposite, right? Like if the market wants to go higher, let's go higher. But let's do this one thing really quickly. Looking at the 15-minute chart here, we know how important it is to understand where this first 15-minute candle is opening and closing, right? So we're going to go ahead and we're going to draw this out. 15-minute chart, we got the Lux Algo, price action concepts, indicator on there. Simple. It's there. That's all we got. We got pivot points, got a pivot to the upside, pivot right here at the 193s, and a pivot down there at the 117. So we got our 15-minute opening range. So basically imagine, okay, that's all we know. We don't know what's going to happen next, but we do know that we have this opening range and that's our top and that's our bottom of the opening range. Like we don't need to predict. We know that this is basically an area of what? Of choppy action. Inside of this first 15-minute candle, there's no real direction up or down. So we want to be careful to not be putting trades on basically in the middle of this range there. So we're going to go ahead and now go to the smaller time frames. Like I said, I have multiple time frames. I have the 2-minute chart. I have the 1-minute chart. I have the 15-minute chart. I got the hourly chart. I got 3-minute. I mean, I'm always kind of changing different time frames and looking at all the different time frames to get a better understanding of what is going on, not just on the smallest time frame. If you're only focused on the smallest time frame, you're going to end up missing out on, number one, you're going to miss out on actually being able to identify like what the market is doing if you're only focused on the small time frame. So right here, we're looking at this move right now. Okay, let's go to the 1-minute chart. That's our opening range, this 15-minute candle. We broke to the upside from the 290s up there to the 310s, about a 20-point move. And then look what happened. And then look what happens here. We then pull back inside of this 15-minute range. So first off, there's really no reason to do anything if we can't even hold right here. Like if we can't hold right there at the 66s, like we definitely don't want to get long here. We don't want to get long here. The only place that I would even think about getting long is maybe off the bottom of the opening range. But in general, still not really any reason to do anything inside of this range, because what do we know? That if we're inside that range, what is a ranging market doing? It's basically consolidating, it's chopping, it's not doing what we want it to do. It's not making a move. It's hard to make money when the market's just chopping up and down, right? We want to be in a direction. We want the market to either be going up or to be going down. Like we don't care either way, but we want it to be going in a direction. So here's the thing, right? What we want to focus on is, okay, we're back inside that range. So there's no reason to place a trade really inside of here. So what I want to wait for is the idea of this breaking to the downside. Here's the issue. Think about it like this. And I know this has happened to you because I've done it. Everyone's done it. You try to buy the dip right here, right? And then guess what? It goes down another 10 points. And you're like, damn it. And then guess what? It pushes back up and you're like, oh, I'm in the green. I'm in the green. Take profit quickly. So you take profit. You take your 5 handles, 6 handles, whatever. You risk 20, but you took your profit. You're like, okay, I took my profit. I just want to get out for green. Like, I just want to get out. And that's something very like common for day traders. Like, you get into this trade, you're down 20 handles, you then get out for a 5 handle profit. So you risk 1,000, you make $200 in profit. The risk to reward is just not there, right? Like, it's not a valid trade. There is no solid risk to reward. You don't have a plan other than the fact of basically buying in the middle here. So I just want to wait. What am I going to do? I'm going to wait. Okay, 15-minute chart. Look at this. We're kind of just chopping around here. And then guess what? Look at how nice this breakdown is. We break outside of the 15-minute range. And then look at this. From this level, from the 203, 202 level, we get a short there. The market never really gets back up there. So what do we have? You know, we're short, like right here. We never even like push up into the red. So we're pretty much just like in the green the whole trade. We have a lot of confidence. We're able to hold, you know, our target's kind of like down towards this pivot area. We're thinking like if we can sell lower, we would basically like make that next leg down. So we're confident in the trade. We believe in the trade. At no point were we basically in the red. You know, maybe you're in red for like a little bit of red, but in general, like you didn't hold for a 20-point drawdown. So you're not like emotionally not able to hold on to this winner. So you're able to capitalize from the 203s all the way down there to the 30s. So you got about a 50-point, 40-point, you know, 30-point move here, and you're only risking a few points. Obviously, the risk is probably, you know, if you're short here, I would say breaking below the low. I mean, you're risking kind of off the 10. So you're risking 6 here, right? On this trade, you risk 20. On here, you're risking 6. You're making 60. On this, you're making 5. Like, is that a good trade to you? Like, if you're risking 20, you're making 5, or do you want to be risking 6, making 60? So all this comes down to is just having patience. All you had to do was, instead of trying to buy this dip here, you just wait, you wait. Okay, that was at 9:56. This is at 10:13. That's less than what, 30 minutes? You waited 30 minutes to now make a couple $1,000s? Like, what a bad trade-off. Oh my God, I waited 30 minutes to make a couple $1,000. And during that trade, I had confidence. I was able to hold through it. So there's a big difference between trying to just magically pick the bottom when the market's selling off and just being like, oh, I'm going to get long. Oh God, it's crashing more. Oh God, I'm getting out for break even. Oh, I'm getting out for $100 in profit. No, we wait for our trade to set up. We wait for our strategy, that 15-minute opening range. We talked about it so much here on the channel. I mean, I've posted a million videos about it. We talk about it on Twitter. It's like, I don't even know how at this point, like why I need to talk about it, but I don't even know why I need to cover it anymore. But that 15-minute range, guys, you need to be able to identify and look at the chart and see it happening, right? 15-minute chart, pull it up, see the action, and then take the profit, right? It's that much easier. Trading is so much easier if you're able to get into a trade and have confidence in the trade, because you're able to hold for a winner. You're able to hold for an actual like good solid move. You know, if you're able to risk a few couple $100 or whatever it is to make 1,000, like you're going to be so much more in the driver's seat. You're going to be driving the trade. That's what I always tell people. Like, I want to be in the driver's seat. I want to be in the trade and I want to be driving it forward. I want to be confident in the trade. And if you don't wait for your setup, if you don't wait for your rules to apply to the trade, well, then you're not going to be able to be in that driver's seat. You're going to take profit early. You're going to get stopped out, whatever it is. You're not going to be able to like be confident in the move. So it's very important to understand that you need to have the patience to wait for your setups, because your setups are going to be that much better, right? What's the point in even learning to trade if you don't follow the plan, like you don't follow your setups? If you're just constantly jumping in and out of trades, chasing the price action, you're never going to be able to build up confidence in your process. You're never going to be able to build up a confidence that you're going to be able to win, right? Like that's very common for people. They basically constantly am just chasing the price action. They don't know what to do. Like, oh, what am I going to do? And they're constantly just like in, they're out. They're not following the plan. So they have no plan. If you don't follow the plan, well, then like, what's the point in even being a trader in the first place? You're just gambling. You might as well start gambling, go to Vegas, bet on black, bet on red, because at that point, that's all you're doing. If you're just constantly just like, oh, I'm going to buy this dip, I think it's going to go back up. Like, why is it going to go back up? Is it inside that 15-minute range? Are you following any type of plan at all? Or are you just like, oh, it's moving. It's moving. I want to get in. There's a big difference between having a plan, like having the 15-minute opening range breakout or breakdown. You're going to have so much more confidence in the move. You're going to be able to hold for a bigger winner. You're going to be able to cut off the loser because, like, the thing is, if you enter a trade and you know what your risk reward is right away, you're like, okay, I'm risking 5, I'm risking 7. This is my profit target. Okay, perfect. Like, I know that there's a chance that I might lose. But I also know that this strategy, this process that I go through, it's lining me up that I am going to be able to get rewarded. I'm going to be able to make a couple $1,000s on this trade compared to just like, oh, I'm just going to buy. I'm getting in. Oh, the market's pulling back. It went up. Now I'm getting in. Like, oh, no. Hold on. Wait. Let's, be confident in ourselves. Let's be confident in our process. Do what we need to do to even build up that confidence. Then we're just constantly going to be chasing the price action. You're not going to make money. If you're constantly chasing price action, you're not going to make money. So before you enter a trade, identify, like, what's the setup? Is there a setup? Do you have an advantage? Do you see something happening? Are we breaking out of a range? Are we breaking below the VWAP? Whatever it is, like, figure out reasons to want to enter the trade other than just being like, the price is moving. Oh my gosh, it's going up. No, I'm not going to get in. Oh, God, I'm going to get short. Oh, I'm like trying to fight the price action. Like, no, it's totally fine. Like, I'm totally fine buying when the market's going up. If I'm confident in the move, like I feel like there's a good setup. If I see something happening, I'm like, hey, look, I think this is going to happen. There's momentum here. I'm going to jump in. Being able to identify this setup and tell yourself where your stop is, where your risk is, where your profit, all that stuff, it's going to make you that much better of a trader because you're going to be able to cut off your losers and you're going to be able to take profit and you're going to be able to lock in that profit. And you're going to be able to hold on to the winners. That's one thing. Like, if you really want to get to the point where you're holding on to your winners, you're making bigger profits, you got to be able to identify like why you're entering and understand why the market's going to move in this possible direction. Not just like, oh, I'm jumping in. I think it's going to go up, like just guessing. Like, if you're guessing, you're going to lose. If you have a setup, you have a plan, then you can make money. And that's how you make money as a day trader, having a plan, having a process, and building it up, having an edge in the market, my friends. If you guys want to learn more about trading in general, hit that subscribe button, the like buttons, all the buttons down below. Let's go.